Shares rallying 14% into the close on reports FTX is exploring a deal. Joining us now is Devin Ryan, analyst at JMP Securities. Devin, I guess just maybe in broad outlines as to whether it in fact makes sense for an FTX to try and bundle in Robinhood, 16 million customer accounts or something like that, as a way, I suppose, of getting greater entree into retail equity and option trading. So is this something that you think is attractive if you're a Robinhood shareholder, I guess?
Yeah, thanks, Mike. Well, first off, we're not surprised there's interest. Robinhood has a leading scale platform in the retail brokerage space. So if you want to break into that space, there's not many ways to do it in a scale way. And so Robinhood would check that box. They have $6 billion in cash on their balance sheet. It's a $7 billion market cap today. So, the stock is quite cheap relative to the balance sheet value. And then strategically, yeah, I can see where FTX as a potential suitor would make sense. And, there's obviously been other press that they're looking at some other platforms in the space. The one last point here, though, is that Robinhood management team, they own about 15% of the stock, but they have Class B shares that give them a 10-to-1 voting rights. So I don't see this as a fire sale. They own a majority, 60% of the vote. So really, they'd have to get the management team on board here, which in our opinion would have to be at a much higher price than where the stock is.
And I would love to drill into a little bit the $6 billion in cash on the balance sheet. It's been mentioned quite a bit. I just want to make sure, is that genuinely unencumbered cash that's not required to be set aside for capital, levels or anything like that? Because I've covered brokerage firms a long time. Nobody ever talks about cash on the balance sheet when you talk about financial companies. But is that, in fact, just a slug of cash that is not otherwise spoken for?
Well, the way we would explain it is that if you were to liquidate the firm, that's the cash that is available. So it is the firm's cash. Now, they do have an operation where they have to put up cash for clearing parties and to run the business. And so, that's not all excess cash. But the point is that if you think about investment banks or brokers and where's book value, liquidation value, that's kind of the way, we would frame this, that you have $6 billion of liquidation of cash that's sitting right there.
Yeah, and you did mention that obviously with management having a lot of say as to whether this company gets sold. The stock is still down 90% from its highs. Presumably they don't feel as if there's any hurry, certainly from a financial basis, to find a partner. So do you place the odds of a potential acquisition relatively low because of all those factors, or at least at anything like the current price?
Yeah, anything close to the current price, very low. We don't think the company's been seeking out partners. That's our opinion. But to the extent it really makes sense for someone and someone wants to pay up, that's where the probability starts to increase. So our base case here is that the probability is still relatively low unless we get a lot more details and it becomes clear that the price would be dramatically higher, where we think the management team might get on board. Because again, they have their Class B shares, where they have gives them kind of the majority vote in that alone, which I'm not sure if everybody realizes. So I don't see a fire sale happening here if the current price suggests that.
There's been the argument for a long time that, especially even when Robinhood came public, barriers to entry are not very high. All discount brokers are 0% commission right now. Obviously, they have a brand, they have a user interface, they have the identification among a certain generation with this is how you trade for free. But is that brand of a lot of value, do you think, still at this point?
Well, I do think it is, because they still own that kind of younger millennial segment, the 30-year-old contingent, and there's been a pretty tough backdrop over the last 6-9 months for trading, no doubt, and we all also realize that what we saw in the first half of last year wasn't normal. But one thing that's actually been pretty encouraging, has not gotten a lot of press, is that they're growing their net deposits, so meaning customers putting money on their platform at a 30% annualized rate just over the past couple of quarters. So what that means is that their customers are still putting a lot of money at a very high growth rate onto their platform to transact and to interact with Robinhood. Unfortunately, the other side of it has been that trading volumes are down because we're in a really difficult trading market, which is affecting institutional accounts as well. So I do think there's a brand, and I think you see it in that deposit level, the net deposits, which are growing at 30% annually.
All right, Devin, appreciate you jumping on the phone and fleshing out the story with us. Thank you very much.
Yeah.